But let's define the opportunity cost. You're all economics and finance students, so I don't think I need to explain what opportunity cost means. There's the opportunity cost in numbers. So choice 1 is going to an investment bank, 1A versus going to a hedge fund, 1B versus trading for yourself. If you go to an investment bank, you give up and give up going to the hedge fund straight away, you're essentially giving up £5 million over 10 years, potentially. If you go to an investment bank, stay there for 10 years, and give up trading for yourself, it can be 5 to 25, and who knows, it could be even more, because you could grow into your own hedge fund. Second choice is going to the investment bank for 2 years and then getting out, and either going to a hedge fund or then going back to trade for yourself. So essentially the reason why you'd go there is to learn the infrastructure of the industry. In monetary value terms, there's zero opportunity cost in doing that. So it's a realistic option. You can do that, but you have to be aware of what you're going into. Because once you stay there for more than 2 years, you're done. You're not getting out for a very long time. What you're also giving up, if your intention is to go to a hedge fund or trade for yourself after, is the qualitative situation, which is you actually give up your track record because you can't trade for yourself. But what about all the trades you do at the investment bank? What about all the trades you do at the investment bank? Are you allowed to advertise those trades to hedge funds or outside investors? No. In your contract it says you're not. Your track record is owned by the bank. You can't use those trades to get yourself a job elsewhere. If you get caught, you get fired. They'll sue you. So there's a qualitative opportunity cost. You give that up. What about the third choice? Trading for yourself, then going to a hedge fund. Well, the opportunity cost is you give up the job at the investment bank. So you give up 340 grand of wealth over 10 years. But you're giving up some security and cash flow. What about if you just trade for yourself forever? So we're back to the point about what this gentleman pointed out earlier, is not taking money out your account. Your objective here is to keep growing your account as big as possible. So you're not actually taking an income from it. What you've got to do, you're giving up the job at the investment bank. What you've actually got to do is find an income from doing something else. Now, if you can get an income doing the same as what a financial analyst or associate does at an investment bank, you've won. Because basically your intention here is to grow into being a hedge fund. So you've got to go and do something else and get a basic salary doing something else. It's not my job to tell you what it is. It's my job to show you how to build yourself into that situation. So if we're being totally objective, what would we be prepared to give up now? If we just look at the numbers. Are we prepared to give up 340 grand of wealth over 10 years with some security and cash flow and having to generate an income elsewhere? Or are we prepared to give up 5 to 25 million pounds? Well, the answer is pretty obvious. What's viable is trade for yourself, then go to a hedge fund. Choice 3A. Trade yourself forever and earn an investment bank trader's income doing something else. That's viable. Choice 3B. 2A. In monetary terms, there's zero opportunity cost in doing it. Going to an investment bank, staying there for 2 years, then going to a hedge fund. But you actually might end up lowering the probability of you going to a hedge fund because you can't get a track record. If you then have to go back and trade for yourself to build your track record, you've lost 2 years. So it's a gamble. What's not viable? Going to an investment bank, staying there for 10 years and giving up the hedge fund. Going to an investment bank, staying there for 10 years versus trading for yourself. You got much more upside. Going to an investment bank, stay there for 2 years, then trade for yourself. Because you're giving up that money. You're giving up the track record. So these are the choices that you're faced with. Those spreadsheets that you're going to get, you know, the end result, where it's got 5.7 at the hedge fund and 25 if you trade for yourself, trading and portfolio management is one way of making money. What you also give up if you go to the investment bank is actually, or even if you go into trading and portfolio management professionally, you also give up the ability to just build a business. You know, you could just go out there and build a business and sell it for 25 million 10 years from now. That's a choice. That's opportunity cost. But you've got to follow the money. If your decision is to be a professional trader, you have to go where the dollars are, go where the money is. Working for an investment bank these days, you absolutely have to critically analyze the opportunity cost of doing it, because what you get paid relative to what you give up is obscene. It never used to be the case. But the market's totally changed, and you have to deal with the reality of it. Go where the money is. It's either with hedge funds or trading for yourself, the same thing, essentially. The hedge fund is just a structure. If you want to go to the investment bank or the hedge fund, you've got to interview them. If you can make a financial analyst's salary, either trading with your own money, equivalent, or a basic salary doing something else and you're trading and making money on top of that, there's absolutely no reason for you to go there. It's just vanity over sanity. It's for the business card. To maybe impress some other people. But the reality is, inside, you will not be impressed with yourself when every month you put your card in the ATM machine and you get poorer every month. It's the reality. You can use the investment bank. We've seen in this presentation today some things that the corporates, the banks will not tell you, how contracts work, how bonuses work, how you get promoted, what happens when you get promoted, how your bonuses get treated when you get portions in stock, etc. These are the things they'll never tell you. The way everything is set up, the more you progress, the more you get locked in. And right at the beginning of your career, 10,000 of you will apply for each trading position. The first 2 years, you're just being used anyway. Because every year, another bunch of them come in. And the vast majority leave. It's how the business works. So the people at the bottom get used. The people in the middle get used, but use less. Because they're locked in all the time. So you can go to the investment bank, learn the infrastructure of the business, and then go to a hedge fund. But once you've gone over 2 years, you're done. You need to stay really focused and not be distracted by the honey trap. The other option is setting up yourself and growing from a retail trader into a professional trader who has a managed account business, and then you grow into the hedge fund, or you find that investor who's going to invest $1 million in you to set up the hedge fund structure in return for equity in the fund. That's possible if you've got a strong track record. But if you just want to do it completely by yourself, just grow yourself into it. So, this is what it comes down to. How do you actually start on the road to success here? There's going to be 500,000 applications, UK, mainland Europe, to investment banks hedge funds, maybe asset managers included as well. The most important thing when you're applying to a big corporate is to get past the HR box tickers, because HR do not know what makes a good trader and portfolio manager. They're given a set of criteria to make the public shareholders happy. That usually involves the school, the grade, what you studied, what you did in your extracurricular activities. You might get an interview. But there's 10,000 of you. You can't stand out if you've just got a 2-1 or a master's at a decent university and you were in 1 or 2 societies and you raised some money for charity. Literally, there's 10,000 of those CVs. So you need to get past the HR box tickers. The single best way to get rid of them, and it's never ever changed, and I find it staggering that nobody still does this, or very few people do, is to actually just trade with your own money. It's the single best way. Because by the time you actually get to the application stage, what you've written on your CV, track record on request, with all the buzzwords, HR don't understand what it means, so they have to send your resume to the desk for the traders to read. If the trader reads it and they see all the buzzwords and they see track record upon request, they're going to want to speak to you. By the time you get to interview stage, they're not interviewing you. You're interviewing them. If you've made money, you're definitely interviewing them. They'll see you as a peer, not a candidate. And what you'll be talking about is what you'd be talking about if you were sitting next to them on the trading desk as their colleague. You'll be head and shoulders above everybody. So yes, if you go to the big corporates, you do need the prerequisite academics. It's not good enough anymore. If you go to an investment bank or a hedge fund and sit down in front of them and say, I want to be a professional trader, and they say, well, I'm going to ask you the obvious question, why? And you say, because it looks really good, I think I'll be really good at it. And then they're going to ask the next question, well, have you ever opened a trading account? And you'll say no, and they'll say why? And there'll be no reason, because anyone can open a trading account in their bedroom in 10 minutes. And then they'll say, well, how do you know you'll be any good at it? And you'll say, well, I don't. And then they'll ask, well, how do you know you'll enjoy it? And you'll say, well, I don't. I just want to be a professional trader. Basically, within 2 minutes, they've worked out that all you want is a job. It doesn't work. You need to have a genuine interest in it, and you need to be able to do it and understand whether you be good at it and you actually enjoy it. If you're in that position, you're a peer, not a candidate. And even if you do it, you've got no downside, because you'll have choices. If you make money, you'll have choices. At that stage, you might decide, well, I'm not going to the investment bank because I'm making more money than them anyway. So I'll just go to a hedge fund, or I'll grow into my own. That's the skew of the numbers at the moment. That's the opportunity cost. That's what you've got to deal with. So this is where we come in. How can the Institute of Trading and Portfolio Management help you with all this stuff? It's all pretty straightforward. These are the 3 problems that we solve in the trading and portfolio management industry. You've got to take 3 steps to be successful in this industry. Very straightforward. The first is learn how to do it, and learn how to do it properly from proper people who know how to teach you and mentor you properly. So really good professional traders, not guys sitting at investment banks, guys who have left, either gone to hedge funds or trade with their own money. You've got to get a real professional trader education. Second is implementation. Implement what you've learned with real money. There's no point in taking step 1 unless you do step 2 with real money afterwards, because step 2 is an education in itself as well. And step 3 is turning what you've learned into a profession. So using your own money and getting outside investment in either yourself or at a hedge fund. These are the problems we solve. So educational foundation, you've got to go to the Institute website, which is www.instutrade.com, and go to the education section and look at the Professional Trading Masterclass video series. It's 28 videos, 53 spreadsheets, 5 trading PDFs. We give you everything you need in the foundation to enable you to do everything yourself, and anyone in the world can buy it. But if you want to come into the Institute and implement what you've learned, it's the prerequisite to come in. Everybody has to do it. And you have to pass the exam. Implementation, you have to do in a safe and regulated environment where there's no conflict of interest. You can either implement it yourself from day one, or we can help you do it, and then you go by yourself later through a mentoring program. We run it as a remote trading desk, which means we see everything you do in the back end. So we try to protect you from yourself and try to teach you how to implement what you've learned properly over time. You get full track record management, which is very important. The worst thing in the world is when people come up to me all the time and they've got a print off of their brokerage account and they go, check out my trades. And I'm like, well, what am I looking at? It's the print off from my brokerage account, if you say so. Everything has to be verified by a third party. You will not obtain outside investment otherwise. And it needs to be audited by an accountancy firm. So you need to use a top 4 accountancy firm, and it costs money. If you come into the Institute community, implement what you've learned in our regulated environment, make money, we pay for that. Why? Because you're an asset. And then we move on to step 3. We'll either give you the managed account structure on power of attorney, where we will invest money in you to trade. So that's where you've started off now as a professional trader. And you can do this from anywhere in the world. We will give you the money to pass your exams. We will pay for your exams, get you the managed account structure, and set you up. And we'll give you money to trade. That's because you're an asset to us. If we think you'd be better off at a hedge fund, and that's your objective, we'll sell you to a hedge fund. Because we have contracts with over 30 hedge funds globally, where they pay us 1 to 200K to hire you because we sourced your talent and we trained you. It's a consultancy contract. It's just a one-off. So it's either or, and that's how you turn it into a profession. It's a fully regulated entity, so FCA in the UK, MiFID in Europe, and National Futures Association in the United States. So we're global. We can take people from all over the world, and you can do it all remotely and turn it into a profession and do it properly. So you just need to go to that URL. That's where it all starts. Instutrade.com/education. And there's 2 packages, the 1 month and the lifetime. We can talk about it in more detail when we go out into the auditorium. When we go out into the auditorium, we can discuss and have more questions and drinks. For the meantime, thank you for having me at the university. Please take the messages that I've given you today very seriously, because it could literally save you 10 years in your career. Because to find that stuff out does actually take 5 to 10 years to find that out. You'd have to go into the industry to know it. When these guys come to pitch you to go to work for their corporates, well, the banks mainly, these are the things you have to be asking them about. Because they're going to give you the corporate PR message. They're going to give you the message that they've been told to give you from the powers that be above. And you've got to ask them the questions, because the person who's actually delivering that message to you probably hates their job. That's the reality of it. Once again, thanks for having me, and I'll see you outside for a drink.